Let's get back to the markets in a different vein now. Let's talk about the charts. Thomas Nagel joins us now from Equinet. And Thomas, it's been a brutal week for the equities. Let's kick off there. Let's talk about the Stoxx 600.
Yeah, Guy, what a fantastic market this week. Let's start with the Stoxx 600 here in Europe. That's the main index. You see, we have a really big uptrend within the last years. This uptrend stopped, of course, in 2007. But within the last 2 years, we formed something like a shoulder-to-shoulder formation. And some weeks ago, we broke the neckline of this shoulder-to-shoulder. That's a big figure of 300. And now we're on the next support level of 280. And that means it's a really critical situation here. It means a break of this 280 level could start some more selling pressure here. That means 8 to 10% down pressure potential is possible in this market. And worst case, we have a target of 257. But that's only worst case. But at this moment, I think this target should be in play. Not so fine at this moment, but that's it.
Dollars under pressure. If you're a US investor investing into the European markets, how different does the story look?
Yeah, the same index we spoke this minute ago here is in dollar-based. That means that's in the eyes of an US dollar investment, and that's really interesting. That means you can see an uptrend too, of course, within since 2003, but we broke the all-time highs of 2000. That means at the end of 2006, this all-time high was broken, and since this time, this index on dollar-based was up nearly 40%. That means each US dollar investor is in the profit zone at this moment. That means we can start selling pressure here. We can make profit. We can realize its profit now here, and that means a lot of potential on the downside from the US dollar investment. And we know the US dollar investors are the main leaders here in the whole European markets, and that's a risk here. That means neckline 300 was broken, and of course same down targets here, nearly 10% down to 250, 275.
So it's time to start taking the drugs. The healthcare stocks finally find favor.
Yeah, that's the only positive sector index I found out here in Europe. That's the healthcare sector. You see, of course, it was a down move within the last 12 months, but the down move stopped some weeks ago at the level of 335. That's a really important level from 2005. And the acceleration, the up move of the last weeks, in my opinion, is really positive. Of course, we reached the first target at 362.50, but after a small consolidation, we should break this level and should go up to 390. 95, and in my opinion, it's a buy here because it's an outperformer.
Let's just wrap it up. One of the key things that everybody looks at, it's Dow theory, it's the transports. What are you seeing?
Yeah, Guy, we spoke about this index a lot of times here on CNBC, and you know, some weeks ago, this index fought with this really big important level of 4,240. So far, this index failed at this level, but now we are back on the next support level of 4,690, and that means it's a really crucial, it's a really important level. A downbreak of this level would lead to further acceleration on the downside to the really important neckline of a shoulder-head-shoulder formation. That's at 4,140. So far, I don't think that we will break this 4,690, but if you see a break of this, we will go down to 4,140. Best case, we will see an upside break, and only the best case, and we can only hope for that, if we see a break of 5,250, I think we would form a new buy signal. But at this moment, of course, it's not possible, but let's see and hope.
I think there's a lot of hope going on at the moment. Thomas, have a great weekend. Thomas Nagel joining us from Equinet. I just want to bring you up to speed with a couple